Market news now. Time to have a look at what's happening in Asia. Shares on that front were mixed as investors reacted to the release of Chinese factory activity data for September. Mainland Chinese stocks closed higher with the Shanghai Composite up 0.9%. Hong Kong's Hang Seng Index, on the other hand, fell nearly 0.5% as of its final hour of trading. China's official manufacturing purchasing managers index for September came in at 49.6, below expectations for a reading of 50.1, and this was by analysts in a Reuters poll. PMI reading below 50 represents contraction, while that above the level signifies expansion. PMI readings are sequential and, of course, represent month-on-month expansion or contraction. Looking at what's happening in Europe, European markets higher, unperturbed by the declines that we saw in Asia overnight. Meanwhile, when we look at what's happening in the U.S., stock futures on that front inched higher during overnight trading after tech stocks dipped again as investors digest the impact from higher rates. To talk to us about all of this, especially some of the news that came out locally on our Johannesburg sense, we are joined by Gary Boyson from Rand Swiss. Gary, to begin with, you winning the, of course, Intellidex Top Securities Broker Award, top overall broker for 2021. Congratulations, first of all. However, I must ask you, what have you learned about, managing clients' money in the period of COVID? What are some of the points that stick out for you?
Well, thank you very much. Listen, I don't think it's been easy for anyone. So over the last 2.5 years, and with the volatility that we saw in 2020, around the market collapse when COVID first happened, there was obviously a lot of movement between clients, a lot of panic, a lot of people that really turned to their advisors for assistance, and the ones that managed to get into the markets early in that dip have actually done very, very well. So this year it's actually been a little bit easier because a lot of that cash that was deployed, is for very, very happy clients. So, overall, it's definitely been a bit of an experience.
All right. So let's look at the JSE performance right now. We had numbers out of Capitec. What did you make of what they reported?
Yeah, so Capitec's numbers looked very, very good today. So we've got a very mixed day at the moment. So the all-share index was actually slightly up about an hour and a half ago. It's just dipped into negative territory now. And that's really, the rise is being driven by the resource companies, but both the industrials and the financials under a lot of pressure. So we've got Capitec down around 3% at the moment, even though the overall numbers for the bank look very, very good. So headline earnings per share up 513% for the 6 months. They're declaring a 12 Rand interim dividend for shareholders as well. Their client base has moved up to 16.8 million clients, which is significant if you think that the adult banking population in South Africa is around 35 million. So they have some serious market share for a new entrant to the market, if you want to call it that, if you compare them to kind of the traditional big four banks that have been around forever. And I think the focus that we certainly feel, reading through the results is that they're doubling down on the digitization. So the idea of opening accounts with, their Global One account, where it's, as simple as, taking a photograph of yourself with a smartphone and, that whole onboarding process becoming very, very easy. I think it's put the bank in good stead. Listening to the CEO, transaction volumes are recovering. And I suppose for shareholders, the only real concern is just the quality of the loan book. There is some concern that, with the South African consumer just under so much pressure, now what are the ability of people to pay back the loans? But in terms of a pure investment play, good dividend, nice growth in earnings, looked like a good set of results.
Okay, so let's look at things stateside. So what do you make of the rally that we've seen in U.S. government bond yields?
So, whenever you remember, bond yields are inverse to bond prices. So essentially, the rally in bond yields is one. It's showing that there's an increase in the requirement for risk. So not risk appetite so much as people need a higher coupon in order to take on that sort of investment. It also indicates that we probably will see a taper sooner rather than later. So the idea that interest rates are rising in the US currently. All of this, I think, just speaks to the difficult situation that we're seeing across the globe at the moment. We're seeing energy prices starting to rise. In Europe, we're seeing them rising in China. We're seeing power outages in China, disruptions to supply chains there. We're seeing obviously the fuel shortages in the UK. Just very, very difficult economic environment at the moment, and all of that I think feeding into the expectation that we're going to see higher inflation in the near future. That higher inflation then will require higher interest rates to tame it. So that's kind of where we're reading the rally in bond yields, and it's certainly taking some risk. It's certainly moving the market at least into a more risk-off feeling, which is why we're seeing some of the equity indices under pressure across the globe.
All right, then as we get to the end of the week, it's a Thursday. What are you keeping an eye on in terms of news events?
Oh, yeah, there's a lot of results coming out at the moment. So we had Capitec today. We also had Bidcorp. We've had a cautionary announcement from Omnia as well. We've obviously got, still got a couple of Fed speakers to go as well. So there's still a lot moving, the markets as always. But I think the concern at the moment is still squarely set on China. You mentioned that manufacturing PMI number coming in at 49.6, which obviously signals a contraction. And it just, it continues to kind of elevate concerns around what's happening in the world's second largest economy. Of course, we've got the Evergrande issue still playing out there as well, which could have a significant impact, certainly on Chinese property markets, but feeding through into global commodity prices as well, especially in the base metals and any construction materials, and that's certainly going to affect South Africa as well. So I think at the moment, it's everyone's got a weathered eye on China.
All right, Gary, thank you so much for your time. That is Gary Boyson from Rand Swiss. And congratulations again to the Rand Swiss team winning that top overall broker award. We're going to take a break, and when we come back, we'll have the labor force with Mbongeni Mutwa coming up.